Trading with myself and Ron Keith and today's guest, Nicholas Brathwaite, who will introduce in a short while. I can see lots of people joining. While they're joining, Ron, what have you been doing this week? What have you been seeing in the news that's caught your eye?
Well, I've been spending a lot of time watching the NASA satellite feeds, looking for hotspots. We've got some fires pretty close.
Oh, you have, yeah.
It's been a little bit distracting for almost 2 weeks now. But
yeah,
it's been interesting watching, kind of the back and forth between China and Taiwan about the semiconductor industry. So Taiwan accused China of hacking TSMC, and then China stole a whole bunch of engineers from TSMC. They've got a couple of their own startups. Xi Jinping, said they're going to spend, all of this money to build out their semiconductor industry, but yet, the big project that they have in Wuhan is on pause because they can't get $20 billion in funding. So it's just been really interesting watching that go back and forth. I mean, as you know, from a fabrication standpoint, Taiwan, they're not the only game in town, but they are by far the biggest game in town.
Yeah.
And China imports about 300 billion in semiconductors annually, and they're looking to, change the balance of payments around on that and make that a little more of an export. So that's been kind of interesting. I saw that you were. I saw that you did a show yesterday on Mexico. I also was reading that both Pegatron and Foxconn are apparently in talks to dramatically expand their presence in Mexico.
Yeah, and I think that's definitely something that's been really interesting as we look at this transition from that China dominance and what people are thinking about that and how they're shifting supply chains. And there's two dynamics you mentioned there. One is the Mexico thing, and there's no doubt from information that I'm sure you're getting as well on the ground that those people are looking to build up their capacity there, buying equipment, doing all that kind of thing. And then the other important dynamic is connecting that semiconductor. So it's that next layer down and those other layers in the supply chain that you have to think about when you're designing a supply chain with less dominance in China. It's no good just taking the final assembly out of China. You've got to look at those layers and layers down in the supply chain. And then I guess there's even a third dynamic, which you talked about, arguments between nations in terms of technology, and we're seeing more and more of that. There's the political side. You just have got to keep a constant eye on it, and I'm sure when we talk to Nick, that's just got to be something you've got to consider in every business move, every investment, every venture these days. It's become such a critical part.
Yeah, I thought it was interesting to see China put export restrictions on some of the key TikTok technology. Our administration thinks it's going to, force a fire sale. I thought that was an interesting blocking maneuver. I'm not sure how this is really going to play out. But when I've read, the Justice Department case on this situation, I just don't really see TikTok as quite the national security threat that it's being made out to be. But I'm not a CIA guy. I don't play one on TV, so maybe I'm missing something.
Yeah, and maybe not a TikTok user.
Oh no, I'm on the viewing side, not so much on the creation side.
There you go. You're not working on your dance moves. Okay, shall we get our guest on today? I'm really looking forward to hearing what they've got to say. Maybe since you've worked with Nick, you're the perfect person to give us a bit of an introduction.
Yeah, so our guest today is Nicholas Brathwaite. Nick was formerly the Chief Technology Officer at Flextronics. He is a founding partner of both Riverwood Capital and Walden Riverwood Ventures. He spends his time about halfway between private equity and venture investments. He's also on the board of a number of technology companies and some philanthropic organizations as well. And I like to refer to him as the most handsome man in venture capital. So with that, Mr. Nick.
It's Nick in space. Hey, Nick, how are you?
I'm doing very well, thank you. Thank you for inviting me to participate with you guys, and it's always good to hang out with Ron whenever I get the chance.
Great to see that you've got such a broad view on what's going on planet Earth. So looking forward to getting your views on that. But I guess we start with the obvious elephant in the room, COVID, and what that's kind of meant to you and the businesses you've invested in. What impact has that had on your year? Has it blown you off course? Has it changed course? What's been going on?
It hasn't really blown us off course or caused us to change course so much, but of course, when the pandemic started, and certainly when it started spreading globally, and especially during the time when we started the lockdown here in the United States, we spent a lot of time just doing scenario planning and making sure that all of our companies had enough cash to make it through whatever challenges they were going to have. And some of them have had some challenges that we've had to deal with. But all in all, we think most of our companies are well capitalized and in a very good position to weather through this storm as long as it doesn't last too long. In our venture business, we have about 60 companies in our portfolio. And I would say there are a handful of them, maybe 5 or 6 that could be in trouble if this goes too long. But most of them are going to be able to weather through this, we believe. Some of them are in very good position. Some of our semiconductor companies, we raise a lot of money, and some of them, a few of them are sitting on, hundreds of millions of dollars of cash. So they should be good. But some of the other ones are not as cash rich, and this is not a good time to try to raise money. So there could be some challenges for a few of them. But in general, I would say our portfolio is doing quite well. And in fact, during this time, we had a couple of big exits. And so that was nice to see. In fact, Berkeley Lights, one of our portfolio companies, went public about a month or so ago. And that was a big IPO, one of the biggest in the US this year. And part of it is because they were helped by COVID, actually, because they developed equipment for doing rapid antibody discovery. And so with COVID, everybody started using the equipment and ordering it, and the company got a lot of visibility. And then we had a company that went public in China a couple of weeks ago. That was a $13 billion IPO. And so we've had a couple of nice exits even during this time. So I would say all in all, there's some pluses and some minuses, but I think all in all, things are okay.
Yeah, it's interesting, isn't it? There are some big shifts out there, and like you say, some of the companies are going to have to watch their cash and be a little bit cautious there. But actually, some of them are seeing some big opportunities. Just going back to what Ron was talking about in the introduction, I think one of those exits you talked about was in the semiconductor sector. Is that the one in China?
Yes.
Yeah. So tell me a bit about that. What part of the semiconductor supply chain were they in?
Well, this is a company called VeriSilicon, and it's more I would call it more on the services side. It's not a product company, and it's not really it's not a fab, but it does provide design services for semiconductor companies. And as Ron mentioned, China is making a big push into the semiconductor industry. That's not new, by the way. China has been working on building a semiconductor industry for many, many years now. And it hasn't gone that well up until recently, but they've accelerated their efforts, and they've gotten a lot more serious about it. In the past, if you look at up to until about 10 years ago, China has spent billions and billions of dollars investing in semiconductor companies. And when you looked at all of the product companies together, they weren't that big. But in the last 10 years or so, they've really started pushing more, and they've They've gone after acquiring IP, and as Ron mentioned, trying to hire people from outside and bring them in. And they started to do a lot better. And so, you know, starting to see companies coming up in China in the semiconductor space that could pose real threats. That could be a real threat to some of the established companies. But I still think that here in the US, we're still way ahead of China and anybody else, but they're making good progress.
Yeah, they're certainly moving on. So when you look at it as kind of a broad thing, and you know, you're across all these different companies, you must be seeing a whole bunch of stuff come across your desk that you're not invested in, as well as what you are invested in. What do you see as the big changes in technology that are happening right now, and perhaps have been accelerated by the COVID pandemic?
I'm not sure that I can say that I've seen anything that's accelerated by the COVID pandemic at the moment. I mean, obviously, on a high level, you know, things like digital health and things like that, you're starting to see more and more attention being paid to them, and a lot more investors are looking at that space. As I mentioned with Berkeley Lights, we've been looking at that space for several years. We have a couple of investments in that space already. I suspect that we will start to see a lot more startups in this whole, you know, digital biology, you know, changes in medical diagnostics, and you know, we already starting to see a lot of stuff around molecular diagnostics and things like that. I think it's still too early to say that you've started to see a major change, but I think between now and the end of the year, you'll probably see a lot more popping up, a lot more companies in that space, and you'll see a lot more investors either raising funds or allocating significant percentages of their funds into those spaces, would be my guess. But I can't say that we've actually seen a lot more activities today. And for us, that is not surprising, because we're one of the few companies, the investors that invest in hardware, we tend to see everything anyway. So we see what's out there. But I suspect that the ones that we haven't seen yet are just starting to probably come online, and you'll start seeing an increase in those types of companies coming up. But I think all of the other spaces remain active. You know, all of the trends that have been driving the investment community over the last couple of years are still the trends that you see today. I don't think COVID is going to change too much of that, except, as I said, you might see more attention being placed on some of the medical diagnostics and medical related stuff.
Yeah.
Nick, I got a question about that. You know, in the period after COVID, you've seen a lot of noise out of Washington about, you know, we've got to bring all this medical stuff back, whether it's PPE, whether it's diagnostic equipment. When you look at Berkeley Lights or some of these ones you're looking at investing in that do hardware for, you know, molecular level development and discovery, how much do you as investors think about where they're building stuff?
Well, you have to think about where, from a supply chain perspective, these days you have to think about a lot of things that before you probably would not have thought about. But let me answer the question kind of a little bit differently, if you don't mind. It might be a little bit long-winded, but let me talk in general about, you know, manufacturing and supply chain, and why people have to think about those things differently today than you did before. Let me start by saying that manufacturing and supply chain optimization did not become important because of COVID-19. You know, the combination of US-China trade wars and the pandemic have certainly caused people to once again focus on the importance of manufacturing and supply chain optimization, but it didn't mean that wasn't important before. It's just that people had neglected it. you know, in my opinion, manufacturing and supply chain management have always been fundamental, almost foundational pillars for both enabling technological advancement and ensuring a reliable supply chain system. You know, when I was at Intel, one of the things that made that company the best semiconductor company on the planet at the time was our world-leading manufacturing capabilities. And I'm on the board of a company today, Power Integrations, that leverages its process and manufacturing technologies as a way to differentiate against others. And the automotive industry have used manufacturing for years as to try to create competitive advantages. And you know, Sony, in the image sensor, they know the dominant image sensing business on the planet. And I remember, you know, I was at Aptina competing against them, and one of the ways they were able to dominate in the space is because of their manufacturing capabilities. So, you know, even before the pandemic, companies had started to rethink their supply chain strategies. Now, a few months ago or a year ago, it was primarily driven by increasing costs in China and concerns about geographical risks. But today, you know, the COVID-19, as the pandemic, as well as the trade war, have highlighted the urgency to move beyond buzzwords and song bites and once again focus on manufacturing and supply chain as important foundational pillars for enabling both the advancements of new product ideas and to ensure supply reliability. So for us as investors in the hardware space or in deep tech, as some people refer to it, we've always been supply chain strategies, and so have always been important because, as I tell some of our companies, you know, startups don't fail because they run out of money. Startups fail because of the reason why they ran out of money, and sometimes the reasons why they run out of money have to do with things like, you know, product strategy, execution, supply chain strategies, and all of those things. And so supply chain strategy is very important for most of the businesses in which we invest.
When you talk about manufacturing being, I'm sorry, Phil, I'm just fascinated with this.
I decided to change my background, by the way, because
I like it.
Yeah.
Big blue marble. So when you talk about manufacturing capability and supply chain expertise being kind of this foundational to these other technological developments, you know, most of the companies that are listening here today and that we work with at SCRG, you know, they outsource their manufacturing. And they outsource it to everybody from, you know, Foxconn and Pegatron, Wistron, Jabil, you know, all the usual suspects. And most of those usual suspects spend well below 1% on R&D. Now, granted, they're not developing products, that's process level R&D, but it's a pretty damn small number. And then you've got some people like Samsung and Sony and Panasonic that are spending, you know, 6, 7, 8 points on R&D. Does that put us at a strategic disadvantage that so much of our hardware industry relies on outsourcing to CMs that spend very little money on process innovation?
Well, it's not the outsourcing itself that's the problem, in my opinion. You know, over the last couple of decades, what has happened is the value and importance of manufacturing and supply chain management have been ignored. And so if you go back in time, Ron, to the times when we were building Flextronics, if you look at going back to the mid-1990s, when the companies started to accelerate outsourcing of the manufacturing and supply chain management, it was a good idea. The idea was that they could focus more on product definition, product development, product management, sales, etc., and have somebody else focus on the manufacturing and make all of the investments necessary to ensure that the manufacturing processes and capabilities were state of the art. Those were the right things to do. The problem is, over the years, we have ended up with some unintended consequences. And for example, many companies started to take the position that manufacturing and supply chain management were low value add activities, not worth paying much attention to, except to drive the service providers to the lowest possible cost and lowest margins. And when you started doing that, then you made it very difficult for them to invest. So that fundamentally has been the problem. If you recall, when we were at Flex, we thought differently. We believed that we had to build best-in-class manufacturing capabilities and engineering capabilities, because those two things go together. You have to be able to hire world-class engineers in order to develop world-class manufacturing processes and sustain them. Then we believed that global supply chain reliability was important and total cost was important. And we thought that all of these things had to work together. And so we invested in ensuring that we were globally competitive in all of those areas. And while as a percentage, our investments may not have been as high, but we invested quite a bit. And you know, as you will recall, at Flex, we had large engineering teams and some very strong R&D organizations. And you know, when I left Flex, we had 5,000 engineers. And I would argue that back in those days, the most of the large deals that we won were not won based on price. They were actually won primarily based on our manufacturing and engineering capabilities and the confidence in our ability to deliver global solutions with very low supply reliability risks. And that's how people made decisions. You had to be competitive from a price perspective, so you had to be there or thereabouts with everybody else, but price alone wasn't the determining factor. But over the years, what has happened is, and especially after 2008, the crisis of 2008, the EMS industry has been beaten up and beaten down so badly. And some of it also might be related to change in leadership, because many of the people who were involved in building the EMS industry then moved on and other people took over. And then the amount of investment being made just became smaller and smaller and smaller, and everybody was just trying to get by.
Yeah, Nick, I am going to use that term beaten up and beaten down to describe the EMS industry again. I think that's absolutely perfect. And I absolutely agree with what you're saying. The whole idea of manufacturing excellence being at the core of success for an EMS business is really, really important. When you look at it from a point of view of what needs to be done now from an EMS point of view, but also the investments you make in digital transformation, what do you see and what do you get excited about there? Are there technologies that you think can help the EMS industry?
Of course, in some cases, we are actually investing directly in technologies that will help manufacturing. So, you know, while most, let me also say, it's not just the customers that created some of the problems. The investment community over the past couple of decades have abandoned the manufacturing and supply chain industry more or less as more and more investment firms focus on apps, SaaS, and e-commerce. And even the academic institutions somewhat abandoned, as you didn't see a lot of, you know, academic programs developed around advanced manufacturing and you know, optimization of manufacturing and things like this. And so when we started WRVI, our VC firm, it was started specifically to address some of that gap. And the founders of WRVI, including myself, are all hardware and supply chain veterans. And our objective here was to take advantage of the opportunities that were being created by the same drivers that everybody was looking at. So if you look at the technological trends of today, there are things like artificial intelligence, machine learning, rapid increase in data traffic, digital biology, IoT, molecular sensing, the electrification of the vehicle, Industry 4.0, home automation, innovation in construction and agriculture and things like that. And all of those drivers, all of those trends require a rethink in hardware. And anytime you have to rethink hardware, then you have to look at manufacturing and everything else. So we are investing in those things and the drivers for those. So some of the areas that we are excited about and investing in does include manufacturing related things. So robotics and automation for advanced capabilities and improved productivity. That's an area we're investing in, which includes, by the way, Industry 4.0 type requirements, as well as, just technology that help transform large existing markets and industries, which I think manufacturing is one, is construction and retail and agriculture and some of those. But we're also investing in advanced materials, which are needed to help drive some of these trends. Semiconductors that's optimized specifically for things like AI and high-speed data movement, molecular sensing, molecular diagnostics, digital biology. All of those are areas in which we're looking to invest, and we have invested in most of them. And some of those directly impact manufacturing, but some of those impact manufacturing indirectly because many of these require new manufacturing techniques or optimized manufacturing for these new types of products. And so the manufacturing companies have to respond to that. The other thing we look at is the manufacturing companies also have to focus on specifically adding value to the startup companies, which are the companies that are driving a lot of these trends. And up until today, I would argue that the EMS industry has not really figured out how to optimize their service offering to benefit startup companies.
Yeah, no, they really struggled with the startup thing. And I guess from their point of view, it doesn't shift the needle in the same way a large brand or OEM growing their business does. So there's a big challenge for them, there. Some really interesting technologies that you're looking at there. If you put yourself in the shoes of the EMS company, because they're in a position where they don't know what's going to happen in 2021. They don't know where the market's shifting. That race for the biggest has kind of been run. The race for the cheapest has kind of been run. I see it as a bit of a race to be the smartest now. What do you think they need to invest in? What do they need to be doing to get their digital strategy on track? What are the key pieces of advice you could give them?
Well, before we talk about some of the areas specifically in terms of technologies and stuff they should be investing in, one of the things they should do is, as I mentioned just a few minutes ago, focus on trying to figure out how to add more value. I'll give you an example. I'll give you an example. Like, a startup company going to a large EMS for services, and the EMS company quoting them based on volume doesn't make any sense, because unless the volume should only relate to custom parts, not to the parts that you're buying in billions or bazillions for other people, because that's the whole reason they're coming, so that they can benefit from your scale and your spend. And if you're not giving them that benefit, then there is not much value in that. And then the other thing is, if you look at startup companies, price is not necessarily the most important thing for most startup companies at the early stage. It's time to market. So you have to try to give them a competitive advantage in terms of time to market. If you focus on giving your customers, whether they're startups or they're large enterprises, if you focus on giving them an advantage so that the people who are not using you cannot compete against them because you give them such a great competitive advantage, then your business will be more successful. But in terms of the types of technologies, I believe that there are 4 areas that I personally look at that I think the EMS companies should look at. But actually there are 5. One of them I would say is they need to expand their business beyond the traditional high-tech hardware businesses that most of them have been in. And they need to start looking at opportunities outside of that industry and expanding into things like construction and other areas like that, leveraging their manufacturing capabilities, assuming that they have world-class manufacturing capabilities, because if you just have mediocre capabilities, nobody else is interested in it. But some of the other areas they have to look at, and this is not new. These are some of these things are things I was working on when I was at Flextronics 10 years ago. But one is design to supply chain integration. That is an area that is not well served today. And that is desperately needed in order to improve decision-making during product development. you know, today it is very difficult, and especially when you have product development in one company and manufacturing in another company. How do you make sure that the decisions being made during product development are optimized for the manufacturing capabilities that you're going to be using? That whole design supply chain integration is very, very important. In the semiconductor industry, we have all these workflows by people like Cadence and others, but we don't have similar types of workflows. But even the Cadence stuff doesn't always give you the perfect cost. But that's something that I think manufacturing companies have to work on. The integration of what most people consider IoT, Internet of Things, and artificial intelligence to create intelligent manufacturing capabilities is another thing that they need to invest in. Not just in predictive analytics. Everybody, when they talk today about IoT and sensors and stuff, it's mostly around predictive analytics. But it's more than that. It has to include data collection, data analytics, and equipment control. And if you can close that circle, you will have a competitive advantage on your manufacturing floor, I believe. And then investment in AI and blockchain for improved visibility and transparency, as well as increased transactional confidence, is something I think these manufacturing companies also have to look at. And then advanced robotics, not just for increasing productivity. Everybody knows you can increase productivity there, but for improving capabilities as well. And I think you have to merge those two things, the significant improvement in capabilities that allow you to do things that you can't do with the equipment that are available today or the processes that are available today, and at the same time increasing productivity. And if those companies are not investing in these or some of these or all of these, and all they're doing is just trying to take the traditional old processes and try to squeeze them into various applications, they're not going to offer the kind of benefit that the customers are looking for.
Wow. Yeah, I absolutely agree with all of those, Nick, and I think you're bang on there. I think what's interesting as another layer on that, which we're seeing at the moment, is not just disruptive products or transformative products, but disruptive or transformative business models. When you're looking at an investment in those kind of technology companies, how much do you look at things like disruptive business models? You know, people that are maybe in robotics and looking at robotics as a service as well as robotics as a capex model. Do you see that? Do you see much shift in that area?
Yeah, but there is a shift in it, but sometimes for the wrong reason. So first of all, we always look at all aspects of innovation. When we think of innovation, we don't just think of innovation at the product level. We think of innovation at the business level. Sometimes the biggest innovation could be the business model, not necessarily the product. And so we look at all of those things. The problem is that oftentimes people are looking at these things as a way of trying to drive valuation. So everybody is going to try to tell you that their business is really a SaaS model because they're trying to get SaaS multiples, not because they really have anything innovative or they're really adding any benefit to the customer, or what they have is doing any real good to them. So the motivation is wrong. If all you're trying to do is just try to convince investors that they should give you a higher valuation because, quote unquote, one day you could be a SaaS company, that's not the right motivation. But I do believe that when people think of innovation, you should think of innovation not just at the product level, but also at the business level, like the business model level. Because oftentimes, when you have a product that's not highly differentiated, sometimes the greater differentiation comes from the business model.
Yeah. Yeah, interestingly, I've spoken to a few, quite a lot of CEOs of EMS companies at the moment, and a couple of things have come through. One that I think really talks to what you mentioned earlier, and that's the connection between factory floor performance and business performance. And I think that's really interesting. I've spoken to a couple of Scandinavian companies recently that have had fantastic figures through this year, and they put that partially down to growth, but this real focus on manufacturing excellence and technology to do that. So I think that's really important. But I also chaired a panel recently with some CEOs of EMS companies, and they talked about two pressures: one to invest in digital transformation, and one to keep their capex under control because they're getting pressure from their board. And that's kind of pushing them to look at different business models from their vendors, different supply solutions. So, you know, if they can move something from capex to OpEx, that's maybe attractive. And maybe in a large organization, you can sell into the OpEx model easier than you can sell into the capex, because it, you know, it's maybe done at a individual factory or individual facility level rather than a corporate level. Is that a change that you see at the moment?
Yeah, I mean, one of the reasons for looking at these types of business models is to make the investment more capital efficient. You know, people have to put out large amounts of capital in order to build factories or buy equipment or whatever the case is. It makes the investment just harder. Whereas if you could convert capex to opex, even if it costs over time a little bit more, it oftentimes is a more efficient business model from an investment perspective. At some point, you might make the decision to change that, but that's one of the reasons. It's the difference between whether you need to put $20 million into a company to get it to cash flow break even, or whether you need to put $120 million in.
Yeah, I think that can be huge. And again, I think when I look at robotics as a service, if robotics as a service is going into reduce headcount's coming out of OpEx, so maybe its replacement fits into OpEx really well. Ron, I know you've got a question you wanted to ask from one of the audience.
Yeah, so Alex in the audience was asking about, you know, are you guys doing any investments in advanced planning and scheduling software and systems? You know, it seems to me that even today, so many companies spend so much overhead on the planning, the scheduling, the S&OP process. Seems like there'd be some AI opportunities there. Are you guys looking at anything like that? Have you seen anything that's really blowing your socks off?
Well, I have personally looked at 2 or 3 companies in that space so far. We haven't made any investment yet, but I have looked at a couple, and I think Michael Marks might have looked at 1 or 2 of them as well. So yes, it's an area we're interested in. It's an area we understand, but the ones we've looked at so far just did not bring enough technology differentiation in our mind. There is one, however, that was actually started by a former colleague of ours, primarily looking at financial planning. That is very, very interesting. But we've looked at some that are looking at, you know, the S&OP process and other things, but in many cases, they just don't have, in my opinion, enough technology yet to really bank on them. You know, in some cases, there are people coming and saying they're using AI, but they're really just a takeoff tool, or, you know, it's not that sophisticated. But those are areas that we think could bring tremendous value.
You were also talking about transactional confidence and the potential use of blockchain. Maybe you could talk a little bit about transactional confidence and how that's going to be more important going forward in the supply chain.
Yeah, I mean, I think there are two different issues that I look at, and I link transactional confidence and visibility and transparency together. They're not the same, and I want to make that very clear. They're not the same, and oftentimes the solutions for them are different and might even be somewhat orthogonal in a way. But I believe those 2 things are important together. Number one, you know, today's manufacturing and today's product companies require more and more visibility into the supply chain beyond just, you know, a forecast and a response to a forecast, or a customer request and then a supplier commit, which is traditionally all you had, and you didn't have much visibility beyond that. I think companies now, from a planning perspective, need to have much deeper visibility not just into their first level supplier, but several levels down, all the way, in some cases, all the way maybe down to raw materials. All of these things together make the supply chain itself become more complicated, because now when you think about your supply chain, you're not just thinking about the company that's actually shipping you the products, but you have to think about their suppliers. And when you think about inventory, you have to think about inventory not just within that manufacturing process, the end process, but the processes that feed, or the companies that feed into that. And as you improve this complexity, then I think you also have to improve the security as well as the credibility of the data and some of the transactions associated with that. And that's why I believe, the combination of AI and blockchain could be something that creates a huge advantage, instead of just thinking of, blockchain and the way people think of it in the traditional sense. I think they think of it too narrowly.
Yeah, there are definitely some really interesting opportunities there. I just want to switch gear a little bit, Nick, and go back to that idea of made in, which is what the show's called, and manufacturing geographies. What do you see as the big shifts in terms of the concerns about supply chain dominance in China? Do you see a lot of companies moving out? And when you look at the EMS industry, it's pretty heavily invested in China. How easy is that, or how difficult is that? And what other regions would you see as keys?
Well, regionalization, again, is not new. When we were at Flextronics, that was part of what we created. We had manufacturing operations in 30 countries. And the whole idea there was to have manufacturing capabilities that can provide the best solution to your customers. I remember when we launched the very first Xbox. We launched the first Xbox, I think, in 3 continents all at the same time, and they were all manufactured within continent. We had products being manufactured, I think, in Mexico, where I think Ron was running that factory at the time, if I'm not mistaken, and we had products being manufactured in Eastern Europe and in Asia, and that product was launched in those things more or less simultaneously. And the idea there was in-region manufacturing was important. In some cases for regionalization or language type customization and other things, so you might only do the back end. And in some cases, because when you look at total cost, that was actually the cheapest way to do it. But you had to have sophisticated capabilities that would allow you to do that. We designed the first Xbox. And when we were developing it, we had to develop it with that in mind, knowing that we're going to be launching in multiple countries at the same time. As people have pushed more and more on the cost, the unit cost, and in some cases, you even have different organizations who are looking at cost. So one person might be looking at manufacturing costs, somebody else is looking at logistics costs, and as you push more and more on this just unit cost, that has driven more and more of the business to China over time. And now people are starting to realize that that could be a problem. Number one, costs in China have started going up quite rapidly, and people were looking at moving out of China and have started moving out of China into places like Vietnam and Malaysia and India and other places for several years now. But in addition to that, now you have to go and create or build back capabilities that you would have given up several years ago when you moved everything into China. And that is not easy. The reason a lot of companies are in China is not the cost of labor. Ron and I have talked about this before. If people were choosing a place just because of the cost of labor, they'll probably be in Indonesia before they go into China. The part of the challenge you have is that in China, you have a very robust supply chain that feeds into the factories, and you don't have that in other places. And that's the biggest competitive barrier oftentimes. I think you can get people trained. You have engineers you can find in other countries that are really good, but it's the supply chain part, the feeding into these things. You have some countries that might have cheap labor, but they have to import cardboard boxes. So they don't even make cardboard boxes there. So if you want to ship anything, you have to import the boxes in, and then to ship them back out. So I think that is the big challenge as people have moved more and more into China and out of some of these other areas. The supply chain never developed. I know you're going to have to go and reestablish those capabilities.
Yeah, if it was all about labor arbitrage, everything in the world would be built in Namibia. And yet,
that's right. That's right.
You don't see a lot of high-tech stuff built in Namibia.
Yeah, I mean, that supply chain thing's huge. Do you see that as one of the key investments that government should be focusing incentives on? Is it building out a better back-end supply chain? You know, it's clear that that's a strong part of China's strategy and has been for a couple of decades now. Do you see anybody else having the opportunity to do that? And do you see anywhere where there is a strong supply chain that can compete?
But I don't see anywhere that has a strong enough supply chain today to compete, but there are places that have a good start. I think Mexico has a decent start. I think Malaysia has a decent start. I think Vietnam is investing in that space and coming up. And I think a lot of those people are doing the right things. I think in India, they're starting to realize that this is important and start to invest, but they're not anywhere close yet. Certainly in the semiconductor space and some of those areas, they already have capabilities, and in some cases, you know, fabrication, even small fabrication capabilities being brought up. But many places it will have to be developed and has to be invested. And sadly, many of the countries that should be looking at this are focused too much on tax incentives and not enough on developing the infrastructure to attract the companies to begin with. And I gave a talk recently where I said, tax incentive is not an incentive, it's an expectation. You have to work on other things to create the incentive. And I think some of the Eastern European countries and even some of the Asian countries, and even places like Africa. I mean, there are places like Kenya and Ghana and Nigeria who are talking about trying to attract high-tech companies, and Latin America and others. And I think those governments need to realize that they need to go invest in the infrastructure and supply chain capabilities to be able to do that. If you have to import cardboard boxes, the first thing you might have to do is create a company that will build cardboard boxes. You know, I'm from the Caribbean, and I remember giving a talk in the Caribbean one time that said, if you want to build a bicycle in the Caribbean, you can't import all the parts from Taiwan and then assemble the bicycle in the Caribbean and think you're going to have a lower cost bicycle. You're going to have to be able to build some of the things, the wheels, the handlebars, or whatever in the Caribbean if you want to build a bicycle that's going to be less expensive in the Caribbean. And so that's the whole idea around the supply chain.
Yeah, supply chain is absolutely critical in that area. When you look at what's happening at the moment with people shifting those models, and Ron already mentioned companies like Pegatron and Foxconn looking at Mexico, looking at other geographies. Do you think there's likely to be a lot of M&A activity as a result of that?
I would imagine so. I mean, I can't speak for those companies, but the Taiwanese companies have been primarily successful because they're run by almost superhuman CEOs and executives who touch everything. And they've been successful because they've operated in a way where they can touch everything. When you start moving outside of Taiwan and China and you start going into Mexico and so, where you can't necessarily touch everything and you may not understand the culture and the dynamics of those places, it's a little bit more difficult. And so they may have to look at potential acquisitions where it's not just about acquiring a capability, but also acquiring a management team that could run the business the way they might want to run it. I'm speculating here. Of course, I don't know those companies' strategies. But I think it's not just about that. I personally believe that it is very likely that, you know, even fabs like TSMC and others will have to look at potentially manufacturing in the United States. And one of the reasons is many of those companies are becoming very expensive. You know, the top engineers in India and China make almost as much as engineers in Canada, for example, are engineers in some parts of the United States. Maybe not as much as Silicon Valley, but some of them make almost as much as engineers in the US. And so the costs are starting to get pretty high in some of those areas, and plus the geographic risk and other issues. So I think it would not surprise me, and again, I don't have any inside information about this, I don't know, but it would not surprise me if you started seeing, you know, other parts of the tech industry looking at moving onshore here in the US. So, you know, we just have to wait and see. And I believe that the time is right.
Yeah. So if you were an EMS company with a footprint in a lot of different countries, what kind of adjustments would you be making? What would you be looking to do? Would you be looking to extend that regional model? Would you be looking to reduce that dominance in China? Would you be looking to grow your footprint? Or would you be looking to even disrupt your own business model?
But let me start with the last part of the question. First of all, I think you always have to look to disrupt your own business model. I started my career at Intel, and as I tell people, we were trained on paranoia. Because in the semiconductor industry back, you know, we had to, you were gonna have a new king of the hill every 18 months or so. And your job in R&D, like I was, is to displace yourself every 18 months or so. You have to disrupt yourself. And so companies should always be looking at what they need to do to meet the requirements, not just of today, but the future. And if that means disrupting yourself, then that's what you have to do. To the more general question, I still believe that a lot of the strategies that we had when we built Flextronics from $100 and so million of revenue to 30-something billion in 13 years, I still believe that a lot of that strategy was the right strategy. The investment in engineering and advanced manufacturing capabilities that would be world-class or best in class. I think that's still important. I think having a regional footprint that reduces supply chain risk and provides regional customization, I think that's still important. No, I don't believe that you have to have 30 countries like we had back then, but I do believe that just depending solely on China is not the right way. I think people, you know, over-indexed to the China solution, and I believe that a highly automated manufacturing capability in the US with top-notch technical skills could compete against even China with their low cost. I do believe that in some areas, not in all areas, but in some areas.
And on that, when you look at building out that capacity, that's kind of a capacity-driven model. What we're seeing now is some, what I would refer to as demand-driven models coming through. So some companies that use perhaps broader manufacturing ecosystems, use pre-audited manufacturing partners, and have kind of this virtual EMS, this virtual manufacturing global ecosystem. Do you see that model as challenging the traditional model?
I think it's a good idea in general, but I don't believe that the tools and infrastructure today exist to be able to make that model work as efficiently as you would like it to work. Because for that model to work, first of all, if you look at demand forecasting today, it's not very good. So, because the tools that we have existing today for doing demand forecasting isn't very good. Now, with artificial intelligence, if we can leverage artificial intelligence to create better demand forecasting models, then that will help a strategy such as this. But you know, I remember when I was running Aptina, and we were one of the largest supplier of chips into the cell phone space. One of the challenges we had all the time is, you know, customers would come in and give us these demand model, this forecast, and very few of them came anywhere close to it. You know, one quarter they way down, one quarter they way up, and it's just hard. And so if you have those kinds of dynamics, it makes it even more difficult now when you're trying to regionalize it. If you can't accurately predict your demands on a global basis, how are you going to predict it on a regional basis? And if you can't, then you create even more chaos within the supply chain.
Yeah, no, I understand that. So go ahead, Ron.
Nick, let me go a little bit out of left field here. So, you know, you're a technologist, you're an investor, but, you know, I think of you as, you know, a manufacturing guy in part. But you see so many companies. I think you once told me you look at, you know, 75 to 100 for every one you invest in. Tell me something that you haven't seen related to manufacturing or related to supply chain that you go, why isn't anybody coming forward with this, whatever this might be? Is there an obvious gap that you go, you know, I think if somebody went with this, you know, I'd fund it because I see the need?
Well, let me first just make one little correction. So certainly in the private equity world, our number of investments of companies we saw was kind of in the ballpark of what you mentioned. In the venture world, it's not as bad, or it's not. I mean, we probably invest in more like, you know, maybe 1 out of 20 or something like that. But some of the things I mentioned before, when I talked about opportunities in manufacturing and supply chain, that the supply chain folks should be looking at, I would look at it. I have seen, for example, and one of the ones I talked about was design supply chain integration. We've seen some companies in that space, but I don't believe that they were really figuring out the product development design side well. It wasn't representing that. It was more, you know, how you can help the buyers in a company understand the dynamics of what's going on in the supply chain better globally and stuff like that. And some of them were very good companies. But I would love to see a company that looks at, you know, the integration of design, supply chain, and manufacturing in a way that allows much greater collaboration throughout the entire flow than you have today. And I think if you can get something like that, that could be a winner. The other one I mentioned, and we have seen a couple of companies, the IoT and AI thing. We've seen a lot of companies that are talking about, again, predictive analytics. You see a company that gets started that says we can use AI to tell you when a motor is going to fail. And all they're doing really is they're looking at either the mechanical, electrical signature coming off of that motor, and they can tell when there's a change and when the motor probably needs to be changed. But it's not looking at the vast majority of parameters that help you to determine whether or not your process is in control. They're just looking at equipment failure and equipment maintenance, but not process side. And Ron, as you know, having run factories and things like that, we used to spend lots and lots of time doing, you know, design of experiments, multivariable design of experiments to try to understand the impact of various process parameters on the product, as well as the interaction of those things. And none of the companies that I've seen so far, with the exception of one that we're looking at very closely today, which we may invest in, is taking a multivariable approach to trying to understand the process and even be able to adjust and control the equipment as part of that. And I'm surprised that we're not seeing anything like that. And on the AI blockchain stuff I mentioned, I haven't seen anybody that have come with a company that really leverages AI to help you to do better demand forecasting, and then tie that into improved visibility and transparency in the supply chain and all that. I haven't seen anything like that. I've seen people with pieces of it. And some of these areas, like in the IoT and AI space, I think there's a great opportunity for potentially a roll-up of a company by picking up pieces, small companies who are all doing a piece of this and putting it together to create a company that could be pretty special. And I've started looking at that. The problem is every one of those companies believe that they're going to be $1 billion business in the next 2 or 3 years, and so nobody wants to merge. And they're all wrong, by the way, but it's all because
I guess you see a lot. I guess you see a lot of people that are wrong, and that's part of the challenge. What I was going to ask you, just
wrong, but we are also
well,
wrong sometimes, so that's okay.
Yeah, and you're allowed to be wrong, and the art of your business is when you're right, you have to be very right, and that pays for getting stuff wrong occasionally. When you look at those investments, are you looking for people that have got the great idea, the great technology, they really understand that, but people that have really got solid experience and background in their target market? So if they're looking at manufacturing, they really need to have a manufacturing pedigree to be able to understand where to and how to apply their technology.
But when you invest in a company, you want to invest in a company where the team has credible domain knowledge experience. But that domain knowledge, you have multiple aspects to that domain knowledge. You have, if it's a manufacturing related business, you for sure want to see somebody in that company who has deep knowledge of manufacturing and processes and how decisions are made and those things. But you also have to have people who have technology domain experience, and you have to have people who might have, sales and marketing or whatever domain experience. So oftentimes it takes a team, not an individual. So, if you had a choice and you were making an investment, and you can find a company that had all of those things wrapped up into the founder, it would be an easy decision to make, but oftentimes that's not the case. So many times you find a founder who might be solid technical person who understands whether it's IoT or AI or whatever the case is, and they really understand that, and you need that knowledge in order to build a company around that. And then what we would do is we would encourage them to go find the pieces that are missing as part, either before we make the investment or as a condition of making the investment.
Yeah.
And as an example of that, we invested in a startup company in Japan. And Japan has really, really good, solid engineers and engineering processes around, technology development, especially fundamental technology development. But many of the startup companies in Japan find it challenging to commercialize products, especially outside of Japan. And so as part of making that investment, we insisted that that company had to come and hire a person, and we made that in the US, who understood the commercialization aspect of product development. And we think that was very important for that company's success. So, but having said that, if you were to take our companies and you can put them into two categories. One is companies where the CEOs and founders are very experienced and have done it before, and ones where it's first-time CEOs. And I can tell you that what I call the harmonics of growth, which is the ups and downs you see as you grow, are almost always greater with the ones that are first-time inexperienced founders.
Yeah, because they haven't seen it before. I think in
That's
wrapping
right.
up on that, it's all about team and technology, isn't it? If you've got a great technology and a great solution that the market wants, and the team to deliver that, and obviously occasionally you guys are part of that team because you're quite often board members, then you've got a killer solution. Any part of that's missing, and you've got some fundamental problems that maybe you can resolve prior to investment or as part of that. But if you can't, then they're in that 19 out of 20 that don't make it, I guess. Anything else you wanted to add, Ron, before we wrap up here? We're just about over the hour. It would be timely.
Other than I got to spend more time with Nick. I haven't seen him in a while, and I learned something and get energized every time I talk to him. So, Nick, I really appreciate your time, and hope to see you face-to-face here sometime.
Well, thanks a lot, Ron. Always a pleasure, man.
Yeah, we're all looking forward to that. It's been a great conversation, Nick. Really appreciate you taking time and being with us, and I'm sure the audience do too. We'll be back again in a couple of weeks. In the meantime, everybody, thanks for joining us. Thanks for taking part. And again, Nick, thanks for being such a star today. Stay safe, and we'll see everybody soon. Thank you.
Thank you. Thanks again for the invitation. I appreciate it.